All right, you are looking live at the Nasdaq daily chart. And you can see here, I'm going to review this again because we did have this uptrend where you step on the gas. This is where you make your big dough. And then in these three legs down, you got to lighten up, tap the brakes, coast down the hill. And then now we're back to a rally above the 50. Stepping on the gas, I'll go green above the 13,714 as it starts to make new highs here. I'm still on yellow, a little cautious because I'm just seeing, it's pretty defensive where we're seeing, the large, mega cap stocks. It's kind of like a flight to safety with some other stocks sprinkled in doing well. But for the most part, the large liquid leaders are the ones that are getting the love from the investors. So we wanted to see that spread out a little bit. Anyway, the peak to trough here from the 4,046 here to the trough, which was the October 26th low, I believe, October 26th, 12,543. That was a 12% move, excuse me. So 12% correction, and now we're starting to ramp higher after a pullback to the 200 simple moving average. That would be considered like a garden variety type of pullback. The Russell 2000 not faring as well, and I lied. I talk out of both sides of my mouth because I said that with the yields going down, the Russell would do better, and the yields went down today, and the Russell went down too. So there is a correlation here as the yields come down. This is the 10-year Treasury yield. As this comes down, the higher risk index should do better, but the Russell was down again today, even though the yield went lower. Our growth stocks did well, but a little surprised that this was down, nearly 1/4% here today. So the Russell needs to get off the stick and get through this 50 and 200 and start to rally here. I guess I'll show the S&P 500. It's above its 50 as well. I don't know if I really talk about the Nasdaq's 1.6 above the 1.6% above the 50, and there's the S&P 500 nearly 1% above the 50. So it's rallied back through. It's been up 8 days in a row, and up every day in the month of November. So you can't tell me that doesn't make a difference as seasonality. Yeah, 1.6% above its 50 simple moving average. So that's a nice strong move. And like I said, there's only been 2 times in the last 12 years where we've had 3 down months in a row on the Nasdaq: August, September, October. It happened last year during the bear market of 2022 and hadn't happened 2 consecutive years since the great financial crisis. So this is a pretty rare phenomenon, and now everybody got short, and it looks like they're getting their faces ripped off here, and the index wants to go higher. And that's why it's so difficult to short. Anyway, I'm going to get off the indexes here. I want to talk about stocks. Apple had a pretty dismal report. And when you see a stock going up on bad news, that is a very bullish sign, because they're just disregarding the bad news and looking, towards next year, 2024. Maybe things will be better. Obviously, somebody sees something here. This is a large mega cap, the largest stock, 182.44. So it did make a high above the 182.34. So that's a good sign. The Apple making higher highs there. Microsoft, this is the one I like of this group, just because of the the symmetrical chart pattern here. I think I had a buy point in here about 340, but it's still actionable here up to the standard 366. That's fine. This thing is just, it's been a beast, building the right side of that base, getting a lot of love, showing strength. When you go to the weekly, and there you can see the consolidation pattern here. I'm not really that big of a volume guy. I like my stocks going higher. And when you see these shorter term moving averages trending higher, the 50 trending higher, the 200 trending higher, that's an uptrend. It's a base within an uptrend. So, okay, I'm going to stop there. I'm going to go to Google. Google not doing as well. It sold off, sliced its 50. That's a vertical violation, and it's taken forever and ever to get back up to its 50. That is a total avoid For me, Meta looks much better. I like Meta here above its moving averages, consolidating within a base. And you can see down here, these guys have a name for this. You got to have a name for everything, but this is consolidating tightly within a base here. So that looks pretty appealing to me. Meta Platforms is actionable at these levels. Amazon as well. Forming the right side of a base, not quite as symmetrical as Microsoft, but this looks good to me here because you got the shakeout, the double shake. Right here, you get the shake, 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 right? And then the rip higher. Okay. So you got the double bottom, the shakeout +3 pattern there. So Amazon looks good to me. Tesla does not. Another one to avoid. Pretty, I think you could look at these charts and just say, hey, this thing's the 50's going down. I don't want it. You want these things going up, right? So everybody else can buy it. I don't care. I'm not interested in Tesla. It looks bad to me, and it's having trouble at the 200. So there's just other stocks to buy. That's all. Nothing personal. All you Tesla heads, that's fine if you like their products. But the stock is a no-go for me right now. NVDA, I put this one on our ready list because it, it's breaking above this downtrend line here. When it hits in 3 different areas and breaks above it, that's a bullish sign. It's got the obvious double bottom pattern, but yeah, I like NVIDIA here. They report earnings on the 21st, so there could be some explosive action here. I wouldn't count that one out just yet. Anyway, okay, since I'm on the semiconductors, there's another one that I like. This is AMD, and I didn't buy it or anything, but I kind of like that it broke above its downtrend line as well. Last week, I believe, after earnings, just a nice solid move. So, AMD, I like it right there, about 108 or so, and now it's powering higher, to 113. Very nice AMD. AVGO, another one of these, large liquid, semiconductor stocks, and this one's got its, faster moving averages trading above the 50. So this one looks a little better, still consolidating within a base though. And that's it for the semiconductors. I got to move on. I'm going to take you down that negative road, and then we're going to bring you back on the positive path. And I've got to go to the oil patch, I should say. The oil was down over 4% today, and I'm sorry if I can't hide. I'm really excited that this cracked, even though I owned one oil stock, but this kind of works against the technology and the growth stocks when these things are doing really well. Tidewater reported today down 12.5%, but more importantly, it sliced its 50 on massive volume. It's adios muchachos if you own that one. INSW, this is one that I did own. I sold it. Didn't do anything wrong. It just pulled back to its 21. I just don't want any more oil and gas stocks. That's all. You can see it's up a couple % after hours. Nothing wrong with this stock, period. Nothing wrong. I just did not want to own an oil and gas stock anymore. So I sold it, easy come, easy go. So, but it reported, it bounced off its 21 and it closed, 2.1% above the 21. So that's good support there for that stock. Weatherford, some of you told me that you own this one and got shaken out. That's fine. I mean, stocks that slice through 21 typically go about down to their 50s. So we'll see if it finds support there. It's a wait and see game there. And in this market, you don't have to wait and see. There's too many other stocks that are rallying and doing well. So, you don't have to hang around with this stuff. It depends on your time frame too. I'm a little impatient. I don't want to wait around. If other things are rallying, I don't want to sit there and wait to find out if Weatherford is finding support. I'm biased also. I don't like to hold oil and gas stocks. They just trade a little differently. That's all. Nothing personal. Okay, I started bringing back on the positive track. Deckers, yes, I bought this one today. I chased it. Yeah, you could say I chased it. I don't care. Wow, it's up $20 after hours, huh? But anyway, it was having it's having trouble with the 600 number, last week. Got above it, then went below it, got above it, went below it. And I was noticing this. And then yesterday, which was Monday, it powered above it. So I bought a small position at 610. Kind of chased it a little bit. Obviously, it's way above its 6.8% above its 21. But to me, this thing's breaking out and it wants higher prices. So I bought a 5% position. So I kind of traded that position with my oil and gas stock, but I wanted a retail stock. This is the leader in the group. I want leaders. You know, it does what, 400,000 shares at 600 bucks. It's barely fits the $25 million criteria, but it's it's a powerful stock. I don't know if I got my math right on that. You guys will double check me and hit me up on YouTube. Anyway, I like leaders. I like Deckers. The Hoga and UGG brands are just selling like crazy. So yes, I switched out to Deckers. AEO, this was flat today. Flat is good. You think, oh, the market was up, my stock was flat. Flat is good. This one has a clear pattern of just pulling back to the moving averages, pulling back, pulling back, pulling back, pulling back. So you don't want to buy it when it's up here. You want to buy it when it comes down to these levels. I mean, if you want to buy it, I'm not saying you want to buy it or not, but that's what I would do. I would wait, buy on weakness on that, on something like that. Abercrombie and Fitch, another one. Just this thing's looking like Deckers just wants higher prices. Earnings on the 21st, that's coming up. But see that this is the type of stock that I, trend trader likes, that there's just, it's getting support at the moving averages here and just trending higher. The green, the pink, the red are stacked, aligned, trending higher. That's a trend trader's dream. Do I own it? No. I should, but I don't. I bought Deckers. I chased Deckers instead at 600 bucks. Anyway, Lululemon. What did I have on this one? I'm losing focus here. This one had this pennant pattern. I had it on our ready list last week, but then it kind of blasted higher and I didn't want to chase it like Deckers. But this is obviously getting love as well. And trading higher. When's earnings? Not till December 7th. So, but you see the moving averages, the green, the pink, and the red, they're trending higher. So that's, a key sign there. The RS line trading above its slower moving averages. So yeah, I like Lululemon as well. Do I own it? No, you can't kiss all the babies. I'm just pointing these out here. This is Ross Stores. This is one that I like as well. I don't own it. No, I don't. But this is a long period of consolidation. You know what they say, the longer the base, the higher in space. This one, 31 week cup with handle, then it has 11 week flat base. That's a lot of consolidating, folks. They have earnings on the 16th. That's next, Wednesday or Thursday? Anyway, Ross Stores looks good to me. I got to move on. Oh, somebody asked me if I would cover this stock, and I said I would. So, once again, it's got, this big. First of all, I'm going to go back here. I'm babbling. Sorry about that. It has a prior uptrend. 9 to 15 is an uptrend. Then it goes sideways for a long, long, long time. Okay, it has this consolidation here between 15 and 11. And now it breaks higher and above its moving averages here. And it's very thinly traded. You can see the average daily volume is 21,000. I have to point that out. Even on the high volume days, it's less than 100,000, I believe. This is 96,000 shares, 91.8. So it's extremely thinly traded, but you can see the relative strength line, moving through the moving averages. It looks good. I mean, but it's just thinly traded. And the sporting goods, such as tennis, pool tables, fitness, what caught my eye is they sell pickleball products. And around here, I see pickleball everywhere. And I know my buddies in Palm Springs, they play pickleball, and pickleball is getting really big. But I wouldn't touch the stock. It's not my style, but definitely it's trending higher. And it's shown the ability to move higher. So I forget who pointed it out. TV Time Machine on Twitter asked me. So there you go. If you own it, congrats. That has a nice move there from 13 to over 18. So I just thought I would cover that. And since it had pickleball in there, pickleball's popular, folks. Okay, enough with the retail. I'm a sucker for retail. I'm going back to the software names in the desktop software. There's only 6 names in the group. Microsoft, I showed you earlier, and Adobe. These are beasts. These are the types of stocks that are getting love here from investors. They're large, they're liquid, they have free cash flow, they have a return on equity, they have nice balance sheets, and they have the ability to withstand a downturn in the economy. So it's like a flight to safety with Microsoft, Adobe, and then some of the enterprise software. Now I like this one. It's starting to push away from the base. I would still say that's actionable and it's going to be on our ready list, but if it moves any higher, I'm going to have to take it off. Datadog, they had a nice report and a nice response to the report. Still, even after a big move, it's still 13.5% off of its highs. So even after a 28% move today. So it was in a nasty downturn and had a long way to go. Still has a lot of work to do, but nice move. Congrats to the longs there. Palantir is another one that is showing strength that I like because of the earnings gap, and then the pullback. And now, the investors are always going to come back. When you have an earnings gap like that, they don't buy every day, they don't buy every week, but they buy and then they come back. It takes them a while to establish a position. And for a stock with this many shares, this much supply to move like that takes a lot of demand. So there's definitely some interest in Palantir. What was the other one? Oh, MDB. Yeah, I believe they had an earnings report. No, they didn't. It just went higher on in concert with the AYX and God, who else besides the Datadog? There's another one. Anyway, there's some really nice software reports, and the software stock showed strength as the oil and gas stocks just suffered mightily today. Let them suffer. They've had a nice long run since COVID. Other software names in the security space, I believe CrowdStrike is the leader in this group, and that would be the one that I would be interested in here at 192. If it gets above 192. I know my earlier buy point was 160, but these things change, and when they pulled back, shook some people out, and now I'd say that would be a new buy point. Now I'm interested in CrowdStrike. 192, although I already own that stock. Zscaler, same thing. I had this on our watch list because it's been consolidating for a long time. It's a nice long consolidation period. Today broke above that level. So to me, that's a good buy area. It's actionable, I should say. And Palo Alto Networks. I don't think Zscaler and Palo Alto are as strong as CrowdStrike. Why do I say that? Well, Palo Alto is below its 50. You can see it's trading below its 50. Zscaler now traded above its 50 today, so I'm going to have to watch myself because these things change quickly. And it's 5.3% above its 10 EMA. So Zscaler's flexing like Arnold, and that one's 4.9%. So Zscaler and CrowdStrike is like a horse race there. All right, I'm going to move on to the drugs, because I like drugs. I don't take drugs, but I like drug stocks. Just a few of them now. And Lilly, I had a buy point here at 575. Originally 601.84, and I just say 600. If it trades above that, that's good. Below it, it'd probably find support at the 50-year. But Eli Lilly is just a beast. Another one of these large liquid leading stocks. If you want a drug stock, there's only a couple that I would even consider in this current environment. And Novo Nordisk as well, right at that 100 level, above 100, I like it. Below it, you got to look for support. So Novo looks good. Oh, and TGTX, this is my spec play. And it had a massive run last week, and it's just having a quiet week this week. This looks like a short stroke pattern here where it goes up, 60%, did I say? Something like that. I don't know what it was. 58.9, okay, 59%, and this week is only given back 2%. So definitely keep your eye on that one. 70% off of its high. Has some work to do, folks. Anyway, I like to gamble. Oh, the home builders, Pulte. Wow, this thing just ramped right off. This looks kind of like the Nasdaq. We're just hit November and just wanted to go higher, and it's just forming the right side of the base. Now, DHI had earnings last night, and I believe they had a good response. I'm not in any home builders, but yeah, that's a nice move here. Nearly 3%. It's got some volume coming in, making this it's still got this downtrending 50 on these because they've been, in this downtrend for 3 months. So just something to watch, not anything actionable for me. Yeah, another one with a downtrending 50. But forming a base here, and just a nice sharp move off the lows there at 68 to 80, which is a nice move for Toll Brothers. They make a kind of higher end semi-custom homes. Okay, I'm going to go to the medical product stocks because this one had a big move today, and a lot of folks are yammering about it. But really, I mean, it was up 51%. Couldn't even get up to its 200. I mean, congrats, if you bought it yesterday and held for the earnings, you had a good move, but it's still 39% off its high after a 51% move. So that tells you how much pain and suffering this thing has gone from 99 down to below 40. So just wanted to point it out. Shockwave was shocking move today. This thing was up 315 not long ago. I remember flirting with this thing around 300 when it had this nice cup with handle pattern, but man, this thing has fallen out of bed. That is shocking. Shockwave. Guess the earnings report wasn't very well received. And the last one is Lantheus. Yeah, clearly in a downtrend too. These medical product stocks have really been hammered. 35.5% off its high, which is not that bad. That's still within forming a base, but the short trend moving averages are below the longer trend moving averages, and that's never a good thing. All right, that's it for me today, except for I lied. I have one more thing. Celsius reported today. Their conference call is going on right now. But, they announced a 3-for-1 stock split last week ahead of earnings, which, got my antennas up, because usually, if you're going to do something like that, you're going to blow out earnings, and they did. They had a nice, strong report, but how did the stock respond? Well, at first it went up, but then it went, get really sold off. There's got to be a lot of selling pressure to move that thing from 188 down to a 167. That's a $21 move. Below the 50, this is a downtrending 50 simple moving average. You got the 10 and the 21 below the 50. Clearly in a short-term downtrend. This has a lot of work to do within this base. I'm not saying, it's done. It's kind of like ELF here. It just needs to base. It needs some time, but that a stock that goes down on good news that's a very bearish action there. Only 16% off the high and consolidating, in this base. So just give it some time. It's a very strong report. They have good products. They're taking market share. They're expanding into other countries. They're, they have new drinks, new countries that they're going into. So definitely something to watch, but this is not actionable right here, folks. Anyway, not for me. That was it. That was my one more thing for the great Steve Jobs. Celsius, avoid. Anyway, that's it for me. Thanks for watching. Tomorrow's another day. A lot of earnings reports to go through. Oh, I lied. I want to go through one more. I don't know what this company does, but I know what the stock does, and it just goes down. This is a horrific move, 22% after hours. After it already went from 72 to 25. Just, this was a $400 stock one day, and now it's down, below, $25. Upstart. I heard the CEO talking about AI and stuff, and you could see after hours that nobody's buying it. On the flip side, Upwork after hours. Yeah, nice little 18% move. And this is commercial services staffing. This is jobs, hiring. So anyway, just thought I'd point that out. Thanks for watching at mcstockcharts.com. We never give up. See you tomorrow.